Hello, everyone, and welcome to Payroll Accounting. This is for the 2025 spring semester, and it's a short class. There are going to be 6 chapters and then the payroll project, so I will work with you through all of that. Now, this chapter is just going to be a highlight, an overview of what we're going to discuss through this semester. There are many laws and regulations in reference to payroll. And so some of this today will be really looking at some of the laws that govern how we process payroll. As far as salaries go, payroll managers are averaging right now about $89,000 a year, where the payroll clerks, their salary is about $45,000 a year. Know that we have ethics in accounting, and that includes payroll. Confidentiality is really big because you've got sensitive information that you need to keep private. You can see here, be mindful of the personal aspect of the relationship with the employer and the employee. Strive for compliance, accuracy, and timeliness in these activities. Be aware of the laws and know of any changing regulatory laws that can come into effect quite often. Refrain from using any employer association activities for one's personal gain, and just to support one another in the process. So many laws, and we're going to start with a few. The Fair Labor Standards Act, FLSA, we're going to talk about, and primarily they discuss minimum wages. We'll talk about the FICA, the Federal Insurance Contributions Act, withholding, and unemployment. Now, there are laws against discrimination that we'll talk about. For the Fair Labor Standards Act, the minimum wage federally right now is $7.25 per hour. Now, there are different rules for state purposes, but for federal, $7.25. The Fair Labor Act states there should be equal pay for equal work provisions. And then there are various laws in regards to working between states, interstate commerce, or there are laws regarding producing goods with interstate commerce. A lot more of this will be covered in future chapters, but as a nutshell, that's what we get for the Fair Labor Standard. For the FICA, the Federal Insurance Contribution Act, this is something that is taken out of every employee's check. There are two parts to it. The Federal Old Age and Survivors Trust Fund and the Federal Disability Insurance Trust Fund, which is the OASDI. And then there's the health insurance for Medicare. Both of these are taken out of the employee. I believe it's 6.2% for the OASDI and 1.45% for the health insurance. And the exact same amount that is taken out of the employee's check, the employer must also match equally. This is for all employees, and if an employee is, or if there's an individual who is self-employed, they must pay the full amount. Again, we'll talk in greater length in a future chapter. Income tax, if it's applicable, is withheld from employees' wages. It is withheld from paychecks because the federal government would like their money as you are earning the money. There are wage brackets and charts. There's also a percentage formula that can be used to determine how much needs to be withheld. There are states, I believe all but 5 states have state income tax: Florida, Tennessee, New Hampshire, Nevada, Washington, Texas. I think I picked them on, maybe 6. But only 6 states do not have state income tax. The amounts vary by state. And again, we'll focus on that in another chapter. The FUTA, the Federal Unemployment Tax Act, is a tax for employers. These are taxes that are used to take care of administrative expenses of the unemployment program. If an employer pays state unemployment tax, then they do receive a credit for the federal unemployment. This is not used for paying unemployment benefits. That is handled through the individual state in which you are employed. The State Unemployment Act has a mandatory unemployment insurance, and that is used, employers pay it, not employees, to pay the unemployment benefits. Now, they can vary in each state also. What one state may allow for the amount and the time length can vary between states. So as we look at this, we see, according to the Fair Labor Standard Act, what's the minimum wage rate? $7.25. This act also does discuss who is allowed overtime and the guidelines to that. The Fair Employment Laws, which are in the Civil Rights Act of 1964, they prohibit discrimination in hiring, firing, promoting, or compensating employees based on color, race, religion, national origin, or gender. And unions also can't exclude individuals into their union based on these factors. The Fair Employment Law also discusses sexual harassment being prohibited. And this act applies to any employer who engages in an industry that affects commerce and that employ 15 or more workers in each of 20 or more weeks in the current or the preceding calendar year. The new Civil Rights Act of 1991 set out laws for damages where discrimination was found to be intentional. Age discrimination in the 1967 Act shows that employers, employment agencies, and labor unions cannot use age to discriminate in any hiring, firing, or promoting. And again, this applies to employers that have interstate commerce with 20 or more workers. It provides protection to workers that are over 40 years of age, except if an executive is 65 years or older who have held high policy-making positions during a 2-year period prior to retirement and are entitled to an annual retirement benefit of at least 44 years old. Such employees can be forced to retire. Now, the requirement or the impetus to maintain records is on the employer. This is a big one we've heard of recently, the American with Disabilities Act. This act prohibits employers with 15 or more employees, employment agencies, labor organizations, or committees, joint labor committees, from discriminating against qualified people based on disability. This applies to job application procedures, hiring, advancement, the termination, compensation, job training, and any other conditions of employment. So they need to provide reasonable accommodations so these workers can perform their job. The Federal Personal Responsibility and Work Opportunity Reconciliation Act requires employers to report information on all new hires within 20 days of hire to the state agency, including their name and address and social security number. This allows the state to coordinate any back pay or required child support and oftentimes back taxes that need to be paid up. A few states require this also for independent contractors. Immigration Reform and Control Act of 1986 bars hiring and retaining aliens that are not authorized to work in the United States. The employee has to complete an I-9 form, and the I-9 form basically shows that they either are a U.S. citizen or they have the necessary documents that show they are allowed to work. The Citizenship and Immigration Services can audit and levy penalties if an employer doesn't adhere to these guidelines. E-Verify is a government-run system that allows employers to check employment eligibility of new hires by taking their I-9 form and checking it with databases. That's only a voluntary program, but it is very beneficial. The Family and Medical Leave Act, FMLA, covers employees with 50 or more employees within a 75-mile radius for at least 20 weeks in the current or preceding calendar year. Employees are guaranteed 12 weeks of unpaid leave for childbirth, adoption, or serious illness of the employee or the employee's child, spouse, or parent. It can be used at once or in separate times within a 12-month qualifying event. A reduced number of hours per day for an indefinite period can be used for leave in cases of employees' chronic health condition, but it's got to be the employees. Employer must continue health care coverage and guarantee the right to return to the same job or similar type of position. Federal tax credits now available for employers that provide paid family medical leave to their employees for up to 12 weeks. The FMLA expanded to include 12 weeks when the family member is on active duty, or up to 26 weeks in the line of duty due to illness or injury. Employers can often exempt employees given certain situations. And this is the federal act, but the state laws can have varying. The state can sometimes override these federal laws and make them more stringent. Military personnel, this act shows they are allowed leaves of absences from their civilian jobs for active military service. And when they return, they get to keep their seniority, or if not, accrue more seniority. They are not to be harmed because they are in duty. Reinstatement must be to the employee's original position or equivalent, and the return must be granted within 2 weeks of the job request. And then the health benefits need to start up right away. The Employee Retirement Income Security Act, ERISA, of 1974, shows laws that protect the pension funds and make sure workers that are covered by private pension plans, they're going to have that money when they retire. There were times that employers were abusing those pension plans, and as a result, this law came out. 0 vesting for the first 5 years of service, with 100% vesting at the end of the 5th year. And then there's a 3 to 7 year vesting, provides for 20% vesting after 3 years of service, and a 20% annual increase until that 100% vesting is reached in 7 years. So there are strict guidelines as to how those pensions are taken care of, funded. The employee is eligible after reaching 21 years of age or completing 1 year of service, whichever happens later. A year of service is 12 months, which the employee works at least 1,000 hours. And there are guidelines that the employer needs to take care of in regards to the pension plan. The Affordable Care Act consists of legislation that requires health care. Now, as it says on this slide, it was repealed in 2017. So it's uncertain how this law will continue, but it's designed to provide health care for employees to try to help lower costs. State-based health insurance exchanges have been established for those who don't have employer coverage or aren't able to get Medicaid or Medicare. The key is large employees, which means 50 plus full-time employees, are required to report on a form that each employee has health care, and then the members of the family that also have health care through the employer. Small employees that are less than 25 full-time equivalent can purchase affordable insurance through various programs, and they can receive a tax credit if those employers are paying at least 50% of the costs for their employee. States can have various workers' compensation laws, and this is related to if someone gets hurt on the job. Most states require employers to pay those premiums of the employee. And there are state disability laws. 5 states have established laws requiring employers to provide disability benefits, even if it didn't arise for unemployment. So each company is required to have an HR department. Now, oftentimes employers may hire this out to an agency, but still that employer is required to keep records that meet those state and federal requirements. The payroll department performs various functions that are related to payroll, and they usually report to the chief financial officer, also known as the CFO, of the organization. So let's take a look at this first discussion. Cengage International, a chemical manufacturing company, recently started its business in San Francisco. The company has plans of expanding its business to other cities in California. As per the company's business plan, it will be recruiting 50 employees in the current quarter. The payroll clerk of the company is advised that all the employees joining the company should complete Form I-9 before accepting the job offer. You are a payroll manager at Cengage International, and the company's executives are seeking your advice on the procedure involved in the filing of Form I-9. Is this valid? And what details should be involved in completing this form? When we know it's valid because we just saw that all individuals, before they are hired, are required to complete the Form I-9 to verify that they are eligible to work in the United States. They are required to submit documents that show such. This is interesting. The employer cannot ask an applicant about his or her immigration status before there is a conditional job offer. The first section of the I-9 form needs to be signed. The second section must be signed by the employer or whatever the authorized representative is within 3 days of the employee's first day of employment. Many large companies have procedures in place to avoid litigation in terms of recruiting and selecting, orienting, training, and terminating personnel. Job descriptions are handled through HR, and they need to be prepared before the job's advertised. And then, just to make sure all of the hiring and recruiting is above board, there are usually specific processes in place that everyone must adhere to. Here's a discussion. Your friend owns a startup, and it's of the opinion that the payroll department can handle all the steps involved in the hiring of employees, and there's no need for a separate HR department. Explain to your friend the need for a separate HR department and discuss the role that the human resource department plays in the process. Well, basically, there needs to be guidelines in place in terms of how a company recruits, picks, trains, and terminates employees. So the HR department from another department within the company will receive a request to hire. They then will put out and advertise for that position. They'll examine the applications and then interview the potential employees. The payroll department is the one that will set up handle the pay, but the human resources department is the one that will handle any tests that need to be performed, any checks on references, the communicating with the potential applicants. And then once that individual has been hired, the HR department will forward the necessary information to the payroll department. Okay, this just talks about items that can be part of an application for employment. References are usually, most applications do seek references, which is usually one of the last things they do prior to giving someone asking them for offering them the job. Okay, record keeping. So generally our record keeping is now computerized. There will be a personnel file, there's a payroll file, there would be a medical file, and that I-9 copy will be in the file. The personnel files are the property of the employer. The employee has a right to review them, but they are the employer's. There are some documents that are confidential, and employers should not allow employees to view everything, but they do have a right with many of the paperwork to view that. So here's a question for you. Every business, regardless of size, should have an application form to be filled out by a person seeking employment. Which of the following steps is legal in the process of collecting information on employment application forms? A, lie detector tests should be conducted to verify the criminal background. B, give the applicant a notice and a copy of the investigative consumer report within 2 days of making an adverse employment decision. C, notify the applicant in writing that the information obtained will be used in the employment decision. Or D, persons involved in the reviewing of application forms should be involved in the interview process as well. C would be that correct answer. Notify the applicant in writing that information could be used in the hiring decision. Lie detector tests are illegal. The EEOC has stated that criminal background checks can only be used if there's a solid reason for asking about them. You can't ask for arrest records. The payroll accounting system has a payroll register that shows the information showing the payroll entries, the preparing reports for the federal, state, and local laws. And this is used to help compute the gross pay and the net pay. So as you see here on this register, it shows the hours worked, the rate, the gross amount, and then the various deductions that are taken from the paycheck. This payroll record will also link with the ending year W-2. And there's unemployment reports. There's so many reports that are used based on this information. Many companies outsource payroll. The companies you have heard of, Paychex, ADP, are the big ones. But it's when it's a smaller company, it's to their benefit to outsource it just because it's reducing a lot of risk in the payroll process. Last one, discussion here. Your buddy, an executive at a small size company, is planning to outsource the payroll operations of her company. She's skeptical about the quality and cost involved in the outsourcing of the payroll services. You work at an outsourcing company. She's seeking your advice. Explain to your friend the process and the benefits of outsourcing it. Well, it's going to be cost effective than doing it in-house. Increased quality, improved efficiency, probably a quicker release time. And that way, the company focuses on the other aspects of the business. The payroll operations at the company's site still have to deal with the new employee information and the number of hours worked by each employee. And that information then is sent on to the payroll processing department. So, in a nutshell, this is chapter 1 that really gave us an overview of everything we're going to be covering in this course. Have a great week.